What up, Hyperchange? Welcome to another episode of Moonshot Monday. Today I'm gonna pitch that Netflix buys Cheddar. Cheddar is the new media startup that is competing with CNBC. They only launched just 2 years ago, but they have made a huge splash onto the scene. They're seeing tremendous revenue growth, tremendous traction. I am a huge fan of the product myself. I've been on Cheddar a couple times, love the experience, think they're doing everything right, think they're poised to get much, much bigger. They're competing with things like CNBC, Bloomberg, Fox Business News, all of these legacy cable companies that I think are about to go out of business, that are about to get disrupted. Cheddar's the one doing it. This is a white space opportunity when all of these cable operators start to go bankrupt, which is coming in a couple years. And Cheddar is mastering this new niche of always on live passive consumption TV. This is a very complementary and different type of media than what companies like Netflix, Amazon, Hulu, HBO are offering already, where you have, seasons of shows that you can just watch when you want. Sure, that's great and that's great entertainment, but I think there is also a huge place for live TV, live business news, and also live normal news. Before we get too into why I think the synergies of this deal make so much sense with Netflix, let's talk about why Cheddar is so awesome and disruptive. Founded just a couple years ago by Jon Steinberg, who is a former BuzzFeed and Google executive, Cheddar has made a huge splash onto the scene. According to the Wall Street Journal, they posted about $2 million in 2016 revenue. Then they had a goal of doing $8 million in revenue in 2017. According to Jon Steinberg, in late 2017, they were actually on track to do $11 million in revenue. And then word on the street is from the Goldman Sachs Media and Technology Conference that happened in mid-February, Jon Steinberg was on a panel and said that Cheddar had posted $14 million of revenue thus far in 2018, only a month and a half into the year. If you extrapolate that, that means Cheddar's on pace to do about 50, 75, or $100 million in revenue this year. And that is just from their business sort of tech channel, which is on from 9 a.m. to 5 p.m. Monday through Friday. Beyond that, Cheddar is getting ready to launch something called Cheddar Big News, which is going to be a CNN competitor, which is basically, normal headline news, always on. That's gonna be from 6 a.m. to 10 p.m., shot live. So I think that is gonna massively expand the addressable market for Cheddar. I mean, if you take a look at this chart, the revenue speaks for itself. I'm conservatively extrapolating that $14 million number, assuming it's right, to $50 million in revenue in 2018. That's more than a quadruple from what they posted last year. Cheddar is backed by a really impressive group of investors. Amazon is one of the early investors in the company, a bunch of top tier VC firms. Also, Comcast Ventures is an investor in Cheddar as well. How do I think about valuing Cheddar? What do I think they're worth? I think Cheddar, if it's not worth $1 billion, is getting there close. In my last episode about Cheddar, I extrapolated their $11 million revenue number, put a 20 times price sales multiple on that to get to a valuation about $220 million for the company as a whole. I think that is way too low. Now that we've got this new info that they could potentially be doing $50 or $100 million in revenue in 2018, I think the company still needs to boast about a 20 times price sales multiple, given how fast they're growing. This would value the company about $1 billion, assuming they do 50 million this year. Why do I think they deserve such a high price sales multiple? A, because I think they're gonna grow for years to come at a really impressive growth rate. B, because this looks to be an incredibly profitable business model. In this late 2017 interview with Digiday, Jon Steinberg mentions that Cheddar has a monthly operating expenses of about $1 million with 90 employees. I'm assuming they've grown and they're bigger than that now. Let's call it a $2 million monthly average burn. Even so, if they post $50 million in revenue, that means half of it is dropping right to the bottom line, 50% operating margins, even this early in their business model. Those numbers are anywhere close to right. Cheddar is in a really unique spot because not only are they incredibly disruptive and growing, but they also could be immensely profitable at a very early stage. This adds up to a very premium price sales valuation. That's why I think the company is worth $1 billion already and probably climbing. This revenue component and valuation is pretty much just based off of their business tech news side. Imagine if their Cheddar Big News, their CNN competitor that they're about to come out with, is actually successful as well and is as disruptive as what they're doing in business news. Then, CNN is doing over $1 billion in revenue a year. It wouldn't be far-fetched if Cheddar really takes off and dominates to be posting similar numbers just for its news network. So many different ways that I can see Cheddar expanding. They're the only news startup that has really mastered this live TV niche, which I don't think is going away. Very, very complementary to what companies like Netflix are doing. So this is why I think it makes a ton of sense for Netflix to acquire Cheddar now. A, because if they don't do it now, they're gonna miss their chance. I think Cheddar is gonna get too expensive, or they're gonna get bought out by someone else who is competing directly with Netflix. Like I said, Amazon is already an investor in Cheddar. Netflix could piss off Amazon by swooping in and buying Cheddar before Amazon and Bezos do. Also, Comcast Ventures, they own a bunch of conglomerate cable networks. I could see them wanting to buy Cheddar as a hedge against the decline of their cable assets. If Netflix doesn't do it, somebody else will, and I think this is such a complementary, style of content. People love to watch Netflix. They love their shows, but I leave the Netflix platform when I want to watch live business news or real news. And Netflix is competing for time. They want you to be on their platform as much as possible. The way to lock that in would be to also have a complimentary live component on their platform. Imagine if they embedded Cheddar there and they embedded Cheddar's big news. You would never need to watch CNN. You'd never need to watch CNBC. You're always in the Netflix ecosystem, whether it's your show, whether it's for live news. In the long run would be a big stepping stone for Netflix to be able to raise its prices, significantly in the long run, which is already their strategy to grow beyond just adding subscribers. This is a way for Netflix to bring a lot more value to its customers, keep people locked into the ecosystem for longer. And beyond that, Netflix's core business is incredibly capital intensive. Like, they're losing billions of dollars in free cash flow per year to try and invest in original content to stay one step ahead of Amazon and HBO. If the profitability numbers for Cheddar that I'm running are even close to accurate, this actually might be a business that could be producing cash for Netflix if they keep the business model the same, and that would be a very welcome thing for Netflix shareholders. Netflix, with a valuation of about $138 billion today, sure, they could spend a couple billion in cash to buy out Cheddar outright non-dilutively, but I think they want to use their cash to invest in original content. So my suggestion would be Netflix issues $2 billion in new stock to buy out Cheddar for $2 billion. Netflix's market cap is like $140 billion right now, so they'd only have to dilute shareholders about 1.5% to buy out Cheddar for $2 billion. I think that makes a ton of sense. That's super accretive. That's a way for them to leverage this soaring stock price into a really powerful acquisition. Cheddar is only going to get much, much bigger. They're only going to get way more important in this new media landscape, especially with that trend of these cable companies who are their competition about to be dying off. An acqui-hire of John Steinberg, who has shown the ability to execute, that he understands the new media landscape. He has killed it with this unique business model. I just think that he would be a huge addition. Somebody should buy out Cheddar. I believe it should be Netflix because I think it's incredibly complementary to their business, and this is a real way for Netflix to start building a much stronger moat against Amazon, which they're going to need. Either way, regardless, Cheddar is one of my favorite startups, one of the most disruptive companies in media. I'll be watching and following them closely here on Hyperchange, but when they got bought out by Netflix, you heard it here first on Moonshot Monday. I'll see you guys next time. Let me know what you think in the comments below. Peace.